Good morning and welcome to today's edition of the London Session Open. Today is October 15, 2019, and my name is Alejandro Zambrano, and I'm the Global Chief Market Strategist with ATFX. We're going to take a look at the markets as we usually do at this time of the day to provide you guys the levels that I think the markets are watching and trading on. Before we do that, though, as always, I need to stress that trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. Okay, so we're gonna begin with the euro. So you might remember we had a head and shoulders with a left and right shoulder and a head, and we had the break which happened here. And the idea was that on the break to this level here, the market could potentially go towards this level up here, which is the target at 110.51. We reached that target on Friday last week as the pound was rallying higher. Now, the euro went up and then down, and it's now heading up today. And I think at least in the very short term, the trend will probably remain bullish as long as you trade above this candle here, and that will be the low from October 10th. So above that level, the trend is bullish, and the market, as you can see, bounced from these levels here. And I think if we go down to these levels, then at least the short-term system, which is this blue system I use, is gonna tell me that we are in an uptrend. And this is just last week's high, and that could be the first target of the market. But you need to be a bit careful as well. I think around where we are right now, the market should roll over and turn bearish. That's what I think. And up until recently, at least, it looked a bit like we had an inverse and like a normal head and shoulders with head left and maybe right shoulder being created. One could potentially draw a trend line like that. But obviously, right now in the morning, the bias is bullish. And usually when the bias is bullish, which it is right now, 20 minutes till 8, then it will usually continue to be bullish unless it's disrupted by some economic data. So I think we can maybe go up to last week's high, and I think some people might look to buy here. And as long as you're above 109.82, this trend is going to be bullish. If we trade below that level, I think it could be the beginning of an end of this correction here. So it's obviously been bullish for a few days, right? And then I do think though eventually the market will resume its downtrend. And beyond last week's high, the next resistance level is this one here, which is the 110.76 level, followed by this high here from September 13 at 111.10. So those are the different targets that people are targeting. My general view though is that maybe around here we might look to turn around. But again, the short-term system which we're dealing with here in this presentation remains bullish for now, and will remain bullish as long as you're above 109.82. All right, this is the pound, and the pound had an amazing day last week. And reason for that is, it's because hopes of getting a Brexit deal. I'm not sure if any comments were just released. The markets were really, really quiet, and now in the last 40 minutes started to move upwards. It could also just be sort of the final moment of sort of trying to go a little bit higher, and then I think eventually probably turn lower. It's not a secret that it was a very, very strong move. We already had a bit of a correction yesterday. Again, unless something happened right now, which I missed just before we went live, then I will be very, very, very careful with buying up here. You have this high here, which is the June 25th high. And that is it's a solid resistance. It capped price here in the beginning of June, and then by the end of June, the market spent some time here. Now, I'd also use this longer term Andrews pitchfork. It's not the best one. It has a few touch points though. You got 1, 2, 3, potentially 4, and then you have the midpoint. So that 5, 6, 7, 8, 9, 10, 11, 12, 13, about 13, and then on the lower level, 14, 15, 16, 17. Here you can see it just went straight through these levels. It didn't really care too much. So we got a good amount of touch points here, and you see you got some touch points here as well. So this channel has been working rather good, and it does actually suggest that around these levels, this is a take profit level, and for some aggressive traders, it's also a opportunity to short sell. The idea would be to, in essence, just sell stops. Ideally, we don't actually go above this level. I mean, much higher than that level, but alternative would be, but I think because the market's a bit volatile, I think again the June 25th high is still very important. So then here you're looking at a residual ratio maybe 3 times the money if we go back to support. As for my very short-term blue system, I call it blue because I use blue charts. I usually use these lines on green charts. But if you look at this from a very, very short-term perspective, which is again that blue system I use with the blue charts, which is what we do now actually, then the trend will remain bullish above 125.12. But take that out, and we would have a confirmation that this was a high, and then take this out, go a little bit lower, like that, and then maybe two, like these sections here. So what do I think? Well, I personally think the market is gonna maybe go up a bit and then roll over, and then maybe next week come down. But if you just want to follow the short term, the system I've been using for many years, then the trend is bullish above this level, and buying dips is what you could do. Dollar versus the Japanese yen. Unfortunately, this market went straight above that trend funding level, and there's not too much to do about that. I was bearish on pretty much, I think it was pretty much here. My memory serves me bad. I think it was here, and we went towards my direction for quite a long time, but then I think 2 weeks later the market, as you can see here, went straight up. And going forward, I mean, if you look at this from a bigger picture, this is your weekly chart, and the market has stabilized above 104.61, and then you have this here. So it could be a massive, I mean, it's definitely a massive double bottom, double top pattern. I think as well, if you wanted to, you could probably make it into a triangle like that. So this market is consolidating. That's what it's doing, and will probably consolidate for longer, unfortunately. I'm gonna skip these lines. I don't think they're really that important. I think we can just focus on this little section here. On the daily chart, this is an inverse head and shoulders, so the head left and right shoulder, and the idea is you just do something like that, and then that will be it. If we take out the trade above this level, it would be a bullish event, and we did trade above that trend funding level, so at least in the short term, I guess we're being forced to be bullish. I don't really like it too much though, because you have all these highs here. So we skip that interpretation for a little bit. Let's try to keep it very, very simple. So there's no doubt that at least in the very, very short term, then you have this high here, right? And then you have this low, you got a low here, and you got a low here. And at least in the short term, the trend is bullish. Now I do know we have a head and shoulders here. I know we traded above the level. They didn't get like a very strong move. It's a bit messy here, but I would say maybe it'll come down a bit, 107.50, and then maybe go upwards. But I'm a bit not yeah, I would call it confused. It's a bit difficult because this could either be a very good opportunity to sell to the way back in here, but it could also just be sort of down and then go straight up. So I would like to wait here with this one. And the short term, again, a bit overbought. You can see here as well, sort of failed breakout. So we'll be very careful with this market, okay? But it is short and bullish about this low, and I guess we can go down a bit and then up a bit, but I wouldn't really trade this market right now. This is UK, oh no, sorry, West Texas. You might remember a few days ago in this presentation I said as long as you're about the August low, it's probably gonna go upwards. and the market did. I was targeting the midpoint of the June to July range. Here are the June lows, here are the July range high, and we went almost up but didn't really hit target. And then we got word that China was not ready to sign the truce to that deal, and unless um, the December tariffs from the U.S. Are delayed or scrapped. And everybody thought they had a deal, but now suddenly there were either a miscommunication or they just changed their mind. I'm not really sure. Maybe the people negotiating are not the same thing in the decisions. There's a ton of things. Anybody that's done negotiations know that you can have these situations. Key point is this though, is that Mnuchin, which is the Treasury Secretary of the U.S., he said yesterday that if the Chinese government does not sign the deal, well then the tariffs in December will definitely go up. So obviously it's a very, very fragile situation here, and I think it's going to continue to be difficult for quite a number of years. I think, as I said before, from China's side, they win more by trying to stall things. And then as well, if the U.S. economy does go down, that's gonna potentially help Elizabeth Warren to become the next president. So there's a lot of things in play here, and just buying agricultural products, I think that's awesome. As it's 40 to 50 billion, I think it was, but it's not necessarily gonna change the world economy. In any case, Brent crude oil, West Texas declined, and when I looked at this yesterday, I thought it was going to decline a bit more, but it didn't. So I'm going to lift this a bit now. And if we do revisit the lows, which is about 52.97, I think the trend that people are going to be buying. And I think here, there's always the problem with trading is always this one. Okay, now where are you going to put your stop loss? So which level to trust? So the big levels to trust is obviously the August low, right? Above that level, the overall trend is going to be bullish. But at the same time, if you can put a stop loss here, you'll have a tighter stop loss, and effectively what you have there is that you have less of a better risk-reward ratio. So maybe from here, and you can potentially see this go upwards. Now, is this a great opportunity? It's only a great opportunity if you think we're going to go all the way up to 59 or something like that. That's when your risk-reward ratio is really good. If you would buy down here, then your risk-reward ratio is going to be closer to 1 to 1. It's actually 1.5, so it's not really that great opportunity. It's only if it goes all the way pretty much down here, maybe 51.78, and then one could potentially buy here with stops just below, or buy here with stops just below here. Gold prices. So what's going on here? So a few days ago, Friday, and before that, I think it's Friday 2 weeks ago, because markets are quite slow nowadays. Let me see here. On October 3rd, yeah, so beginning of the month, I see the market's probably going to go down. It went down a bit, and then it went up a bit, and then it went down a bit. But it did touch my target, which was 1480. You can see here we touched that level, and I have reduced the trend line, and I'm going to reduce the trend funding level a bit more. And I'm going to remove this now. The question is here, what's going to happen next? Well, we touched our first target. This is consolidating. It's within that little triangle thing. And I think here, realistically, that this market will probably continue to sort of consolidate, and I think it might be a situation where the market might actually, if we would go up here, you might see some selling again, but I would be careful here, because I have a feeling, when the energy builds like that, when it eventually attacks the high, that the high gives up. Because I think eventually, if this continues to be like that, it doesn't fall down below. What happens if it just takes out that level and it literally just soars to the upside? So I think that's a high risk of that happening. So I would be careful selling too much aggressively up here. Now S&P is bullish, and I've been looking to buy on dips, but we haven't really moved down to the levels I want to see the market bounce from. In the short term, And look at the other side, it's almost overbought. And I have a median line here as well. And you have this little line, which acted as an interesting level. 1, 2, 3, 4, 5, 6, 7, almost 8 times. Maybe gonna be a 9th time now. The same time, like the parallel line to that act as interesting levels 1, 2, 3, 4 times. It would have been great to actually buy down here. Unluckily for me though, I hadn't drawn these when the market was down here, so I had no idea that this was such an interesting level. When I did find out, I wanted to buy, but it went down, but it didn't go enough for me to buy down here. But hopefully it can help now. So what it is telling me, if I'm looking at this, that we had quite a nice ride. Went all the way up. We're at the median line again 8 times before it's blocked price. So we'll be careful buying up at these levels. I think the risk-reward ratio is not very good for that. And then if we remove this now, so where would I like to buy? I think if I could buy again, if this goes good down, according to these channels, it will probably go up, and if it doesn't take out this level, it'll be down here at one point. And that's really where I think it would make more sense to buy. And then at the same time, aggressive traders that think that the market's going to go down and have no issues short selling here, that's what they're going to be short selling, I think, around these levels. Tie stop loss is just above. If they're proven wrong, this market is going to go like that. If not, again, I think probably could do maybe a bit like this, and then potentially like that, and then from here depending on what happens when we go down and depending on the speed of everything, maybe might do like that. That's what I think could potentially happen. These levels are 29.85 and right now it's 29.24. I think we can probably lower this a tiny bit. Yeah, let's leave it like that actually. No, it's a lot of line, but you don't have to trade all the lines. That's what I try to do. For example, only if I'm in a really, not in a good mood, but only if I'm very confident, I will probably short this thing here. What I'm more confident on is buying dips here. Next market, German DAX. So this is the DAX. DAX is really on tear. It's doing really, really good. And it's actually trading above, it did actually slip above last week's high. And even though like a lot of the economic data from Germany has been bad, what the markets do sometimes is that they actually move ahead. So they move ahead of the economic data. So maybe what the market is, and this is not a new, but most economists say that starting from March next year, the data will improve across the world because the Chinese cut interest rates, Federal Reserve cut interest rates, and then don't forget that we have ECB, QE, and all of that creates a short-term impulse, like a stimulus to the economy. So the numbers, the PMI figures, are anticipated to actually grow strongly starting from next year. What could happen here potentially now is that the market is moving ahead of that event. Remember, the German economy has softened quite significantly. If I remember correctly, the data was relatively okay here in 2018, 2017. And now again, the data now, lately though, there's a big separation, I think, where I think stock markets are a bit wrong. But sometimes the market is actually right and just leads ahead. So tactically here, what can we do? Well, you have that big triangle, these lines. So if we do take out these highs, it turns bullish. And this is not an inverse head and shoulders, but it's something like a head and shoulders with a big head, right, and potentially left. I know it's not exactly correct. And the left, the shoulder should be here. But you have your triangle. I think key point is this, is that if we start to trade above these levels, we either going to go have difference like here or maybe something like this. So you're looking realistically at maybe some 12% move. And it's not just the German DAX. There's a ton of these markets that are just below major important levels. So what would I do here then? Well, what did the chart tell us? The chart tells us they're probably going to take a bit easy because this is, at least from a nerve side perspective, not the best time to buy unless the market starts trending a lot. And it does tell us that we need to take out probably the 2019 high. That's what I think, at least, before I would get really aggressively bullish. In the short term, it's a bit like the GBPUSD. You know, we have a bit of a short-term trend above these levels. You could work with that, but I think my personal feeling, what I think, is that I have a suspicion that we might go up, spend a few days here, but then eventually we'll go back into the middle again. At least that's what the data tells me. I could be wrong, but again, the risk-reward ratio for buying up here is not good. If you do want to buy and you want to hold on for a bit, then you probably would still look to buy down here somewhere. If you just look to scalp, then you're probably just looking to be bullish above 12 391. Okay, that's it. We're gonna wrap things up. We covered all the main markets. Don't forget to check out investingcube.com for more analysis. As well, don't forget to become members. Got a lot of content there that you can read by the team and also by myself. If you want to find my stuff, you can just click on About and Investing Cube Authors. You'll find my stuff there. And as well, you can follow me on Twitter at AlexFX00. Thanks so much for watching, and see you guys tomorrow here on the ATFX YouTube channel, but also on investingcube.com. Thank you. Goodbye.